This is Retirement News Online. With current tax rates at historic lows, Roth conversions are a hot topic these days. Now, there are other things to consider besides tax rates when converting to a Roth. My guest is Terry Cox with TDC Financial in Fountain Hills, Arizona. Hey, Terry, thanks for joining us today. When is a Roth conversion a good idea for somebody?
Okay. Well, Roth conversions can be a very good idea depending on individuals' unique circumstances. The primary considerations are taxes, cost, and time. In essence, what you're doing is paying taxes now to never pay taxes again. That is the reason I would like to know the CPAs that my clients are using. A number of the clients who convert to Roth like to know how close or far away they are from the next tax bracket. So we will have a conversation with the CPA and they will let us know how much the client can convert without bumping themselves into the next tax bracket.
So for a Roth conversion, what are the income qualifications?
Well, now anyone can convert their traditional IRA assets over to Roth. It no longer matters if you're single or you're married or how much money you make. Prior to 2010, you could only convert if your adjusted gross income was less than $100,000.
What are some of the other questions to consider here?
Well, the biggest thing to consider is when do you want to start taking distributions? Since Roth IRA contributions are taxed, distributions will be tax-free and penalty-free if the account is open for at least 5 years and at least one of the following 4 requirements have been met. You need to reach the age 59 and a half, or you're buying your first home, you're disabled, or you pass away. You can also take money without a penalty to fund an education as long as the dollars are used for qualified education expenses such as tuition, books, room and board, etc.
Well, Terry, finally, is it important to get professional help with this kind of transaction?
Well, it's extremely important to get professional help with this transactions. Since there's so many things to consider, I'm able to ask questions that people sometimes forget to ask themselves. The biggest one being the tax consequences, followed by the discussion about starting distribution. But it all comes back to needs and desires. Once we have that initial discovery meeting, I can then design a plan that will work for them. Then the Roth can be another avenue to be deployed to help the clients meet their goals.
My guest has been Terry Cox in Fountain Hills, Arizona. This is Retirement News Online. Thanks for watching.